Priscilla, your local realtor in the Los Angeles area. So, first off, Happy New Year. I'm hoping you had a fantastic celebration. Today, I have a very good friend of mine, Ernesto Garay, the finance guy. So, I've got Ernesto here. Ernesto is one of the many lenders that I work with because a lot of my clients have been asking me, is 2023 a good time to buy? Because everybody's talking about interest rates going up and, you know, the housing market crashing, all this gloom and doom things that's apparently going to happen in 2023. So I thought I'd bring Ernesto on so that Ernesto can give us a little bit more of an insight in terms of what is going on in the mortgage industry. So thank you for joining me today, Ernesto.
Well, thank you so much, Priscilla, for having me. I'm super excited to be here and, you know, just give you some of the feedback as to what I think is going to happen in 2023. So we already know that since COVID happened, a lot of interesting things have happened with the housing market and interest rates, making some adjustments. And what we're starting to see at the beginning of the year is that interest rates are starting to stabilize quite a bit. Okay. I know that we've seen an upward trend towards the end of the year, and that's just the market kind of just reacting and going back to what was normal prior to COVID, right? So prior to COVID, we were already kind of floating in the 4.5–5% range. When COVID hit, we did see the rates drop significantly. I like to think of it as a kind of a financial earthquake in a sense. And now what we're seeing is that the market is coming back. We're seeing some price reductions in the market for some of the properties that are out there, different areas all over the state here in California. We are seeing that rates are stabilizing. At least they've been stabilizing over the last couple of weeks.
So if somebody is wanting to get ready to buy this year, what are the top 3 things they need to do in order to get ready to, purchase their first home or their forever home?
Actually, I love that question. So the first C is going to be your capacity. Capacity is essentially, are you working? Lenders like to see 2 years of work history. It doesn't necessarily have to be the same exact position or company, but they want to see that you have 2 years of employment because they want to see that you have the ability to pay or the capacity to pay the money back. The second C is credit. So credit isn't always necessary. There are programs out there where clients can buy with no credit whatsoever. But think of credit as your history with other credit card companies, personal loans, and cars. So when a lender like a bank or a wholesale lender is going to lend you $500,000 to buy a house, they're going to look at that history and say, hey, this person has paid 12 months on time. This person doesn't have any defaults with their student loans, for instance. They don't have a repossession. Now, if you do have some marks on your credit, that's not a bad thing. You know, I consider credit like life. We do things and we kind of learn along the way. So your credit score is going to kind of dictate where your interest rate's going to be. So just because you have a 600 credit score doesn't mean you are going to stop yourself from buying. You just might have a little bit of a higher rate. And then the third C is the capital. So essentially, when you're looking to buy a house, you need the down payment of around 3%, and you also need closing costs. That's your call it skin in the game to buy a house. The bank is going to finance the other 97%. If you put 3% down, they finance 97%. So if you have assets in the bank, if you have assets in your 401k, or even money that's going to be gifted to you from a family member, we look at that, and obviously the bigger down payment, the better, because your payment's going to be more attractive, the rate's going to be better. But even if you don't have the capital, we can look at down payment assistance programs and fast forward or fast track you into a home a lot sooner than having to wait 12, 24, or 36 months.
Perfect. So basically, in conclusion, it is always a good time to buy if you are able to.
Yes.
Right? Because obviously buying a home is not something you do for the short term. You're buying to live a significant amount of time in there, whether it's, 5 years, 7 years, 10 years. It's always a good idea to lock in what that monthly accommodation is gonna cost you.
Correct.
Right. There are three C's that you need to get into place in order to prepare yourselves, right? And I suppose the last thing is, how would somebody get in touch with you if they wanted to find out if they are indeed ready to get into their first home or forever home?
Absolutely. So what we do is we love education. We love teaching our clients the process of buying. So you can find me on Instagram at Ernesto_finance_RZA, or I'm coming out with a new website called thefinancingguy.com. So it should be launching around January 15th. So keep an eye out. Check my social media to see when that website is online.
All right, perfect. Well, thank you so much for taking the time, Ernesto. It's always fun chatting with you.
Absolutely, it's a lot of fun.
If you have questions, comments, leave me a comment below, and obviously share this video with anybody that you think could benefit. I'll see you guys soon.
Happy New Year.